Mike, when looking at long-term portfolio stocks to add, what are some things that you are looking at when evaluating companies? Great question. So it depends on what the macro environment is that we're in. So like on Friday, I did two different things. I added two different types of stocks. On Friday, I added a bunch of stocks that tend to outperform during a recession because I think between now and next year, I think next year we experience a modest or mild recession. So I bought a bunch of stocks that tend to outperform during a recession. But I also bought a bunch of tech stocks that are high growth that I believe in the future, 3, 5, 7 years from now, are going to be absolute juggernauts. So I like to look at companies that have strong management teams, okay, strong, capable management teams. I like to see companies that are continuously improving on the earnings numbers and their growth rates. I want to see companies that are responsible with the amount of cash that they spend and their cash burn. Right now, you want companies in an inflationary environment, in a recessionary environment, you want companies that have strong cash flow. So you want to be cautious of companies right now that do not generate a profit. You want to be cautious of those companies that still operate at a net loss, companies that have no real plan to profitability where they can't say definitively, well, by Q1 of 2023, we're going to be profitable. If there's not a clear sight for a growth stock to be profitable in this environment, you want to try to stay away from those companies. So even the companies that are not profitable, those earnings calls, you want to pay attention to see what the CEO says about, well, when are you going to become profitable? And if that is like, oh yeah, 2025, stay away from them because this is not the environment that those stocks are going to do well. The environment where they do well was 2021 when interest rates are zero. When interest rates go up, you want to stay away from those stocks. But I look for companies that have revolutionary technology, that are best in breed products. I don't look for the cheapest stock, right? You don't want to, when you're a long-term investor, you don't want to just buy a stock because it's cheap. Usually when you buy a stock just because it's cheap, there's a reason why it's cheap, okay? It's because other portfolio and hedge fund managers didn't want to sell the stock. That's why it didn't go down as much as others, okay? You got to remember that. A lot of people think, oh, this stock's down 80%, so it's a better buy because this stock's only down 20. Oh, I'll buy the one that's down 80 because that stock is going to go up more. Wrong. There's a reason that stock's down 80% and this other stock's down 20%, while the overall market has gone down 23. It's because hedge fund managers and money managers wanted to sell the one that's down 80% more because they don't think it's as good of a quality of company as the company that's only down 20. Less people wanted to sell that name. That's why it's only down 20. You got to think of it that way when you're investing for the long-term portfolio.